Good evening, everyone. Today we are doing technical analysis. So today, what is technical analysis? Is a way that we predict what will happen in the future by the previous data. Is a process of predicting the future. You are not saying what will happen. You are predicting the future from the previous data. So now it's like when you are predicting match on football that Chelsea will give Man U 5 goals depending on the previous data. Maybe when Chelsea and Liverpool played, they gave them 5-0. When they are playing with other club, they are giving more than what they're supposed to give. So you are going to predict, okay, since Chelsea has been doing very good, so by the next match they are going to have, they are going to beat them. So this is how we predict what will happen on the market. So we predict what will happen on the market, on the future, by the previous data. So what is analysis? Is just that, is just chart. You do your analysis with this chart. You do your analysis on this chart. It's just this candlestick. So now I will just predict what will happen. Let's say I saw what happened from here to here, from here to here. So I cross here. I know that we are in uptrend. So this, I'm predicting that as this market is going up, everything is going up. So the next one is candlestick pattern. Candlestick pattern. What is candlestick pattern? Is a form or a set of candle that has formed their pattern. Like what is candlestick? Is a candle, just normal candle, a pair of a candle. Like one is a candle. All these things are candles. All these things that you are seeing here are candles. All these things that you are seeing here are candles. These things are candles. All these things are called candles. So we have bullish. You can change your color to any color, but I'll show you later how to change your color. So here is bullish candle. We call this candle Japanese candle. So this is bullish candle, and this black one is bearish. It's bearish candle. So support and resistance. Now this support and resistance is a strategy, but let me show you what is support and what is resistance. Now we go to the chart. Let's go to the chart so that the thing will be just very let me just try something. Let me find a clear space to do this. So now a line, the last place, the last, like is a, let's say a bus stop, a range, a footstep where a market reverse. As you can see now, here the market went up from this place, from this high, and move from here. You see it reversed to this line again, which is the same line. Yes, then it came back to this line, don't forget we have another line here. So here is, so this is support and this is resistance. Support and resistance. So here is resisting all the movement that is coming here. Let's say, let me just draw the line. Let me just draw the line. So as this market, let me just use this one to get it very clear, because this, some people used to call this a zone. So some people used to call this place a zone where market go and retest. You can call it a zone, and it's a strategy. You can call it a strategy. So when market, as you can see, market went from here, go up and retest this support. Support is something that is, you are supporting something to carry something. So here we call it support, we call here resist. So you say that here we resist all the movement. As it touch here, it will stop and reverse back. So we call here support, we call here resistance. So here is resistance, here is support. So how did they trade this support and resistance? So this support and resistance is, you trade it like this. When the market break out of this line now, break out of this line with a full candle close on top like this, as you see that this candle breaks here and close with a full candle and open and retest it, as you can see it retest it here before going. So here you take your entry here, at least you have a good reward, a risk reward. So but this is not our strategy. We don't take trade here, so I have not taught you any strategy here too. So this is a support, here is a support, here is resistance. Support and resistance. So the next one is trend line. Trend line is a line, is a line drawn, is okay. Let's say this market is going upwards. This is my trend line. Let me just draw it from here. This is a trend line, and this trade is somebody set up, is someone set up. So but we don't trade with trend line. So let's say when this market went up and retest this place, this is a setup of a trend line trader. You enter here, you enter from this retest, you enter here and take it up to this place, and you enter here again. Once it bounces to your trend line, you take your trade. Once it bounces to your trend line, you take the trade. Once it bounces to your trend line, you take the trade till it breaks this trend line. So this is someone's setup, like people that trade support and resistance. But me, I don't trade support trend line. I don't trade with trend line. You, at least if you are watching your YouTube, you will see people drawing something like this. So once they see a setup, once it touch this line, they wait for the break, and they wait for the retest. They take it up to this place, then they come here and wait for retest. You see that you will lose your money here. You have, let's say you have 1 2, let's say this one 3, this one 3. You at least you have 2/1. You win 2 to lose 1. But this is the difference between a SMC trader and a trend trader. You can see here the person will lose this trade, but SMC trader will win this trade. Why? Because SMC will draw his support and resistance, or supply and demand here. He knows that there's a liquidity here. So when a trend trader will lose this money, the SMC trader will win this money. So my setup is here. As you can see, I will take this trade and I will win it. An SMC trader will lose this money, so I will win this money. It's my money, it's not anybody's money, so it's my money, it's meant for me. So that's why sometimes I don't trade trend line, I don't trade support and resistance. But some people are making money with it too, but I don't trade it. I have not taught you any strategy yet too. So next one is chart pattern. Now this chart pattern, now is like a drawing, a structure that market used to show you that they want to change either a trend or a big movement. Now this is a chart pattern. You can see this one is called an M pattern. You can see it here, from here. So you can see that this is an M pattern in an uptrend. So you can see that this is an M pattern. It's not every time that this M pattern used to work for people. It depends on how you trade it. So it's someone's strategy, but M pattern. But I will still show you how to trade this M pattern. If you are in an uptrend, you only look for W pattern, which is an inverse part of M pattern. Now let's look for W pattern. Now watch this. Watch this. Watch this. Oh God of Israel. These people are giving me punishment here. Yes, 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 yes. Now you can see here we have W pattern. Now watch this. From here down to this place, down to this place, down to this place, we move up. You see it from here down to this place, to this point, to this point, we move from here. Or if you don't want to take it like that, you do it like this, either from here to this place, but this high and this low, because this low is lower than this one. Okay, you take it from here to here, then here to this place. You enter your trade here. That's an W pattern. Then this is another W pattern. Not okay. This one is M pattern, but you can see this M is okay. You can see an M pattern here. You take it from here, then here, you move down to this end. But mostly this pattern, you just have to follow the trend and follow the pattern and trend works together. Then let's go with the next one. On the candlestick pattern, I will still show you well how to trade with candlestick pattern to form your trading strategy. Then let's enter to the Fibonacci retracement. Now Fibonacci retracement is a tool that we use to calculate the middle, where to take a position, on how to calculate where to enter. So now, but me, I don't use Fibonacci to take a position. I only use Fibonacci to know a discount area and a premium range and a discount. So this is your Fibonacci retracement. So let me just set the retracement the way it's supposed to be. I set it to my own test. Let me just set it the way it should be. So but let me just explain it so that once I will teach you a strategy, I will make everything clear to you. So now this trend, this, if we are in an uptrend, this Fibonacci will turn upside down, which is we are going to look for either 50%, which is a half, or 61.8. 61.8 is, let's say, if you are trading gold, it works well on gold. 61.8 and 50%, it work on gold. But once is GBP, USD, GBP, JPY, other pairs, go indices, all those pairs does not work with 61.8. But once is gold work with 61.8. The middle of the trade, that's where you reverse. So once you see that the market is with 61.8 and 60%, you take your trade, you are good to go. So now I'm going to teach, just to add to this one, I'm going to teach candlestick pattern. Candlestick pattern. Let me show you what is candlestick pattern. Let me show you what is candlestick pattern. Let me show you what candlestick pattern can do. Let me just go to direct to the chart so I can explain it well, so I will be very fast because of our time. Now, this candlestick pattern is someone's strategy. So everything that you see, any movement in the market is someone's strategy. You have to have that in your mind. Anytime you buy or sell, someone is even buying and selling with another strategy. So once the market does not care if you are trading or not. So now this is a candlestick pattern. Now we call this an engulfing pattern. You can see this is an engulfing pattern. This candle engulf this candle engulf this candle, because this one is short and this one is bigger. This one is bigger. So what does it mean? It means that the sellers are trying to put this market down, then the buyers later push it up. So the buyers have more power than the sellers. So that's what this pattern means. So we call this one golfing candle. This one is maribuzo. Maribuzo. Fear this candle. Anytime you see them, just follow and they run. It's like a trailer. If they run, just follow and they run. Anytime you see them, just follow them. So here you can see a good confirmation here. This is a W pattern. We are going up. This is an uptrend. Then you can see a W pattern here. 1 2 3. So we have this high, this low, this high, and this low. A W pattern. Then with this one, they used to call it a butterfly pattern. But for me, I don't use all these things. Okay, this is my part. This is my setup. Once the thing, once it retraces with my order block, and I see this pattern, okay, this is my entry. I enter my trade here. So this is butterfly. They used to call it butterfly, but okay, me I know they do anything butterfly. Once the thing retraces with my order block, I'm taking my trade here. So let's look for another see another one engulfing. See I can take trade here. I can take trade here, but I will just take one trade from, as you can see, I have three trade. Like I have order block,